Hi everyone. Today on Market Makers we have Juzer Tambawalla. Juzer is from Franklin India Mutual Fund and he is Director of Sales Enablement. In this discussion, we are going to talk about the performance of mid cap, small cap space as well as the NFO of Franklin India Multicap Fund. Welcome, Juzer.
Thank you. Thank you. Thank you so much.
Thanks for taking out time for this discussion.
Always a pleasure.
So, Juzair, we'll start with some, really basic questions. Scale it up is the theme of Franklin India Multicap Fund. Juzair, could you elaborate on this theme and also tell us the vision behind launching this fund?
Sure. So I think, firstly, thank you so much for the opportunity, and always lovely to talk to customers of the platform. Now, before I really get into what does scale mean, particularly when it's related to the multi-cap fund itself, just to give you a quick context of the fact that we are launching. I mean. An equity fund after a fairly long period of time, and it is in the multi-cap space. And just for the benefit of those who may not be very well aware of what a multi-cap fund is, it's essentially a fund which compulsorily allocates a minimum of 25% each in large, mid, and small cap companies, and the balance 25 essentially is allocated basis the discretion of the fund manager, and how the fund manager actually sees the prevailing market conditions. Right now, why have we kept this theme as scale? And scale is important, I think, generally, in life itself. But what have we broken the scale down to? Right, one, the S essentially is about the fact that a multi-cap fund, it strengthens your core portfolio, right? Because you're obviously investing across market caps, and that's an important thing when it comes to an investing approach that investors should really take, right? Second very important thing is that there is a consistency in which the allocation is made. So it's unlike to say that, well, are you going to be in a fund which is only dedicated to one particular market capitalization? Well, that's a choice that investors do have. Or would you like to have a fund which consistently gives you at least 25% each in the large, mid, and small cap space? And therefore, the C stands for the fact that it allows investors consistent coverage across market cap segments, right? A is all about the allocation strategy that we will use. And obviously, we have an internal framework in place which basically allows for stock selection and market cap allocation, right? L is actually about the long-term wealth creation opportunity that an investment in a multi-cap fund really offers. And the E essentially stands for the enhanced diversification, because you're getting diversification not just at market cap levels, but you're also getting diversification within that for sector and stock level. And that's really what the scale and the theme for the Franklin India multi-cap really stands for. What's the vision really behind launching this fund right now? I think there are two parts to it. One is, if you look at the category itself, it's grown significantly today. I think the entire category has an AUM excess of 1.4 lakh crores of rupees, right? And it's a product gap that existed in the Franklin product basket, and this is an opportunity for us to really plug that product gap. Second, I think, is the fact that if you look at where India stands today, okay, from an economic perspective, we're in an economic recovery cycle, and typically in the phase, whenever countries go through this particular phase, you always see mid and small cap companies actually performing a lot better, right? And therefore, a multi-cap just makes it a lot more appropriate, because then you give the investor, at least 50%, right, in small and mid caps. So 50% of small, 25% of small caps and 25% of mid caps, gives it a fairly healthy allocation for an investor to really take advantage of the situation that is available from a market participation. And that's really the reason, for launching this fund right now. Yeah.
Interesting. So, and what is the investment strategy for this fund, and how are you going to differentiate it from other multi-cap funds that are available in the market today?
So I think the investment strategy, honestly, there are three objectives, that we want to really achieve. One is we want to achieve growth, and that's where the small and mid cap allocation really, helps to achieve that growth. You also want to offer a relative amount of stability, wherein the large cap allocation then brings that relative stability into place. And the third, of course, is really diversification, because you're getting diversification at all three levels, right? Market cap, sector, as well as stock, right? Now, what really distinguishes, for example, the Franklin India multi-cap from other multi-cap funds? There are 2 points over here. Now, the first thing is that when you're looking at somebody managing the small and mid-cap segment, right? Because a lot of these companies don't have very, very long track records. So they're obviously companies which are in emerging sectors, emerging themes. These are younger companies, right? Although they offer you tremendous growth opportunity, also it makes it that much more difficult for a fund manager to really start analyzing, because there isn't too much of a track record at the back for you to really look at the company's performance. And therefore it's important that you have somebody who has a very deep understanding of the small and mid cap segment. Now, if you look at Franklin Templeton, we have two funds. We've got the Franklin India Prima Fund, okay, which is in the mid cap space. It's got a 30-year track record, right? So you can just imagine the amount of cycles that the team has actually witnessed over a 30-year period through this particular fund. We also have the smaller companies fund, which is dedicatedly investing in smaller companies. That actually has a 16-year track record. So I think we come with very strong legacy, okay, and deep experience when it comes to managing the small and mid cap space, right? I think the second real differentiator, okay, is going to be, and as if you remember what I spoke about in the beginning of my conversation, that 25% each is allocated to large, mid, and small cap. The balance 25, okay, is where the game really becomes very, very interesting, because then that's really at the discretion of the portfolio manager of where is the additional allocation that really needs to be put in place, right? Now, for that, honestly, we have an internal three-factor model, which we kind of, we work through. The first factor essentially looks at the rolling returns, of small and mid caps relative to large caps. The second factor looks at the relative valuation of small and mid caps versus large caps. And finally, the third one is essentially a mix of actually macroeconomic indicators, which the portfolio management team and the research team really use in analyzing stocks, and then finally looking at what is a suitable investment opportunity for. So now I think as I said, two big differentiators, and the first one actually is fairly significant because long experience in the markets is priceless. And thankfully, with Franklin Templeton, with a 30-year track record on the mid cap space and a 16-year on the small cap space, I think that there aren't too many fund houses which can actually boast of that kind of a track record. I think that's an important differentiator for the fund itself. Yeah.
How will be the opportunities identified in this particular fund? And could you also tell us about the QGSV model in detail?
Sure. So, it uses both a top-down and a bottom-up approach, right? So I think from a top-down approach, really, before you actually start filtering themes, okay, a lot of macroeconomic indicators, I think, are give great signs and great indications for the fund manager to really decide on what themes do you want to really focus on. So I'll give you a simple example. Themes like, say, for example, macroeconomic indicators like growth in GDP per capita or disposable income, okay, or what you see in terms of rapidly increasing urbanization, right? Now, all of these indicators bode very well, for example, for the consumption story. And I think we've heard about the consumption story through a lot of experts, in the recent past. Now, when you look at within consumption, okay, obviously there are lots of sub-trends, right, that start emerging. So premiumization. So for example, today a lot of people are trying to kind of elevate their standard of living. So if you had maybe a small car, you're saying, can I go to a mid-size car, right? Now that's obviously because you want to kind of experience premium products. Now, when you're looking at that, okay, you obviously then a lot of times may decide to say that, well, can I actually take a loan? Okay, and therefore that gives rise to consumer credit growth. Correct. So that's another theme, sub theme that's really emerging. And obviously, as there are higher levels of consumption and increasing expenditure. It also bodes well because investors then look at getting returns which are slightly better than inflation adjusted, right? So you're obviously then looking at financialization of assets. So a lot of when you have a few broad macroeconomic indicators which are moving in one particular direction, you have a lot of sub themes really that emerge. So that's the top down piece, right? Then you get down, once you've identified the themes and the sub themes, and you really look at the bottom up approach to say that which are the companies that you really want to invest in. And that's where the QGSV framework really starts emerging, right? Then it becomes very, very useful. So the Q stands for quality. So I think the first bit is obviously about the quality of the business that has been really built, right? What's the kind of management team? What's the kind of experience? What's the level of corporate governance that you can see actually, in that particular company? The second bit is about is about growth. And when you're looking at growth, you're not just looking at the growth of the company, but you're also looking at the growth of the segment at large, right? And also then evaluating to see that, well, the company that you are looking to invest in, how and where does it sit from a relative positioning in that segment? Is it out of 10 companies, is it number 10, or is it somewhere in the middle? And therefore you actually see that, well, the company actually showing and demonstrating potential for growth. The third very important thing in the QGSV net framework is S, which is the sustainability of growth, right? Because it's one thing to look at past data, right? And that gives you a lot of comfort, but also you want to see how is the organization, or how is is that particular company really positioned to continue and sustain that growth, right? So for example, are you seeing actually the company building some kind of a moat to kind of safeguard their business? Are you seeing innovation happening in other categories which is likely to impact the future business of this particular segment or this particular company? So I think that's where the sustainability of growth becomes very important. And then finally, it all boils down to what is the price that you're going to pay, right? And depending on quality, growth, sustainability, then you really start judging to say that, well, is the price that this stock particularly is available, is the valuation something that is compelling for us to kind of really look at it as a long-term investment? So that's really what the QGSV framework is all about. And I'm just trying to explain this to you in the most simplistic manner, but the opportunities are identified using both top-down and bottom-up stock picking. Yeah.
Interesting. So essentially, the QGSV is a good filtering mechanism to shortlist stocks and boil down to few stocks, and on top of it, it has a very interesting factor of sustainability of growth.
Yeah, absolutely. Because I think that's critical, right? Because
Yeah.
ultimately, when you look at company performance, a lot of the data that you will get to see is the past, right? And something that has already happened. Now, yes, obviously, past performance is an important indicator, but then you also want to really look at what's the future looking like for that particular segment or that particular stock. Yeah.
Interesting. And Juzair, which type of investor would find this particular fund appealing?
So really, as a manufacturer and sitting on the manufacturer side, I mean, we obviously have a fairly vast bouquet of products to offer, right? So now think about it, somebody says that, well, I am somebody who is a high risk taker who can afford to kind of, ride through the volatility. I'm looking at an investment horizon which is significantly long, and I can hold on to my investment. Then, well, you may want to just look at the small cap companies portfolio, right? So I mean, we have a smaller companies fund, and one could actually look at that. But if you're somebody who is saying that, well, I want a more balanced, diversified approach to my investing, and if you go back to the point that I made earlier, right, which is about growth, stability, and diversification. So if you're looking at all of these three, okay, then perhaps a fund like the Franklin India Multicap makes a lot of sense for you, because it offers you the two big levers of growth, which is the small and mid cap segment, and it also offers you the lever of stability through the large cap space. So I think if you're looking to to kind in if as an investor your risk profile is more suited towards these three factors, then obviously I think the multi-cap makes it an option as an investment choice for you. Yeah.
Okay. And, Franklin India as a fund house, focused on creating long-term wealth for its, customers. What are your expectations for performance, especially in the mid-cap, small-cap space in the coming years?
Yeah. So I think, I'm going to go back to the point that I made, earlier about where is India, in its economic cycle. And as I said, we are in a phase of an economic recovery. Now, if you look at when countries are in that particular phase, you're obviously important lever. Innovation is an important lever for the company to really, for the country rather, to really drive growth for the long term. And if you look at even today in India, right, there are lots of new emerging segments which are really coming up. Right, so sustainable energy is an important segment. So you obviously a lot of companies into solar power, for example, right? A lot of companies are in the tech space. So you've got the food tech, you've got the edu tech, you've got the fintech space. I mean, I'm sure it's been covered in a lot of news articles that India is got a great startup ecosystem in place. We've got over 100 companies which have actually become unicorns, and obviously some of these companies will finally get listed and so on and so forth. So I think the economic phase that the country really is right now, plus with all that the government is doing, to make sure that innovation, newer ideas, newer segments are actually getting encouraged. Okay. We as an organization, and we believe, and the portfolio managers believe, that the mid and small cap space is something that will see sustained growth, right? Is likely to see sustained growth, for some time to come. Obviously, there will be phases, of some level of volatility that you may actually see, but clearly from a growth perspective, this is perhaps a segment over the next maybe 3 to 5 years time that one should have a healthy allocation to really take advantage of the growth potential that these segments really offer.
Got it. And this multi-cap fund does provide that kind of exposure.
Absolutely, right. So as I said, if you've got 25% mandatorily in small and mid cap segments each, so 25 in the small cap and 25 in the mid cap, I think it really offers you an opportunity as an investor to have a very healthy presence, really. And then obviously you've got the large cap to give you a little bit of the cushion in terms of as a shock absorber in that sense, right? So I think that makes it a product for somebody who is looking for both stability as well as growth, in the portfolio.
Thank you, Juzer. Thank you for taking out time.
Love to have participation from Upstox clients.
Sure. All the best for the NFO.
Thank you so much. Thank you so much, my friend.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.